let's take these fundamentals into a technical picture. Looking at this 4-hour chart, we'll remember this level out of which I had broken out earlier before release of the Federal Reserve minutes at 125. The wave, the breakout of that wave, that was a wave 3. This is now doing internal wave 3, of course. It's going to be doing an internal wave 5 into 3. You're having even a green 3 here and the green 5. That was, of course, an internal 3 into a high degree wave 3. Once we get to do that, this green 5 into 3, we had a degree 4. This is definitely a degree 4 because it shows that negative momentum in the 1 hour. Right? That indentation here is a degree 4. And this, of course, gets labeled into 2 and 4, just like what we do with the United States dollar against the Swiss. So we're about to terminate a higher degree level 3. What this points to is just waiting for that fundamental of interference by the Bank of Japan. Okay, so let's delve into it a bit more. There has been a 2 and the 4. Definitely, this is an extended wave 3. That high degree 4 comes in here. The market moved very high, very quickly to do a termination at level 3, as shown here in green. There has been a wave 4 because when we go down to the 1 hour, we find at this point we have negative momentum in the 1 hour. Let's check it just to understand. So this is the 15-minute. Let's take it to we had that very severe momentum indentation showing here on our analysis as this point relating to a degree 4. What the market is right now doing must be a degree 5. It's as simple as this. There is another tweezer. So yes, it can be a B and a C, but it will still get to do a degree 5. This becomes a B and we get another C, and then we have to do another degree 5. Most probably the correction 4 is finished with what's going on in terms of recession. There's been a 4A and a 4B and a 4C. This is just high degree, that 4 shown here in green. And the current wave 5 is going to be the terminal end of this level 3-5. The terminal end of wave 3 altogether. It is only then that we can expect the bank to interfere suddenly. The market falls like a stone and you begin to see a topping market. Topping market is shown here on that daily chart. So we get, instead of having that level 3-5 way up here at 134, maybe we just get it at 133. Anyway, we get a topping market. We get a lot of head and shoulders or head formations. The first drop, of course, will take you, this head here, takes you down to $122 levels. 122.16. That is the yen against the dollar against the yen, and these kind of levels. So at this point, we cannot expect to get this action. We cannot expect to do shorts until we do that final wave 3, because it's final wave 5. Sorry, showing here in green. Inside of that yellow 5 and yellow 3. Typically, all wave 5s are heads, market tops, and therefore they must be moving. We expect the current. You find that all volatility is very much contracted and moving higher. So it must be in an ending diagonal trying to form a top. This ending diagonal shows here on that 4-hour chart in dashed gray lines. We expect the market is moving into it. We take this down to the 1 hour. We take it, of course, to the 15 minutes. Retractions are going to be small. Any ending diagonal has 5 swings, and that level 3-5 is expected to have 5 swings. We label them on the 15-minute chart, do projections as we move higher. At the point when we have done level 5, we expect there's going to be a correction. If it is fueled by the Bank of Japan, it will be a deep correction. So supposing it takes us to 132.5, 133. Again, if it is fueled by the Bank of Japan, you get to see a drop all the way to at least 128, the next line. This is a 4A then, high degree A that is. And then you do a high degree B and high degree C. Of course, we're not there yet, so we don't have to go into the details, but we will want to be prepared for such a technical, whenever this technically breaks out, for such a technical breakout. Let's do now the internals. Remember, this is that same ending diagonal that we expect we're seeing on the daily. Any ending diagonal, of course, is going to be moving to 5 swings. Right, so this is again momentum segregated. we have a swing A here. Of course, it's a motive. You can rise out of that bearish market must be a moving wave. So you have an A and you have a B. It's the B that is an extreme bottom. Now the market has been doing a C. It did a 1, 2, internal 1, 2, 3, 4, and the 5. This is C. Any correction should fall all the way down to that level. We're interested again in this technical here. Instead of an ending diagonal, this is an ending diagonal, but you get an inlet structure even inside of that. We have two ending diagonals in the first place. There is that very small fraction of an ending diagonal, right? There's that very small fraction of an ending diagonal, and there is a bigger ending diagonal that we're showing on the deal. So here we have a neckline. We know this is level 1, 2, and it relates to what we're seeing in momentum. At that point, yes, there is a neckline, there is a 1, 2, there is internal 1, 2. Right, there is internal 3, 4, bounce right at the top of 1, and there is that 5. This is the end 5 here. End of that wave 3. A wave 4 takes you to bounce at the bottom of that ending diagonal, at the top of level 1, somewhere at around 129.8 and 129.95. Our buys. We just have a hedge at 129.40. Ideal entry. Right, with just 50 points, we can do it this end of the week and keep the hedge on, of course. Next leg is going to be wave E. Wave 5, if you wish to pull it inside of that ending diagonal. It's of course a top out, can take us to 131.50, can take us to 132, we think. At the very least takes us to 131.22. This is now a cycle 5. Of course it's a cycle 3. We used to pull it a cycle 3, but we know it's a top out, so we have changed the terminology to the cycle 5. It's a cycle 5 trend, meaning you can also only get to buy the pivot levels or just support 1 every day and take profit at R1, so long resistance on the 15-minute chart. So long as you're seeing positive momentum cycles on all the higher degree time frames. So today it's a buy at S1, I believe this is S1 if you get to see it. This is the pivot actually, if you get to see it, not even S1. So we get that pivot at 129.85. We get that, we buy it, probably even 129.95 is okay, and we are going, is a buy of course. We have a hedge at 129.40, right, and going into the weekend, we let the profits run because there's no point to closing them, we cannot even get to close them. Next week, we would want to take profits. R1 is this week at 130.9. We want to take profits next week at least at 131.27. 131.27 is the higher boundary of that ending diagonal. Where would we expect another correction? And we do the trade. We expect this to take us all the way to 132 and 132.50. I believe maybe even 132.75 before we have that correction. We can give it 132.58, probably even higher.